All right, welcome everyone. I'm the one that separates you from the break, so I'm going to try to do it quickly and stay on time. My name is Domingo, and I'm going to talk about how blockchain can be applied to how you manage a VC fund and make it liquid. This is the project I'm running with my two co-founders, and of how to tokenize a VC fund. So let me tell you a little bit of the background of the story. So, VCs, are the ones that have been disrupting industries and reinventing the world and making a lot of money on the way to do it. But how is the venture capital industry actually has changed itself over the last few years? And the reason is it hasn't changed actually much. I was actually yesterday explaining to a friend of mine that the word carry and the meaning of this 20% carry that the VCs use comes from the Phoenicians' time in the year 1200 before Christ, where the Phoenicians have a fleet of ships, and they used to charge 20% to people to carry goods from one place to another. So the VC industry is using a term which is 3,000 years old and is still the norm in the industry. So we want to change those things, and how are we going to do it? Well, the first thing and the main problem of VCs and why the VC investment and the investment in VCs is a small asset class compared to other asset classes is because VCs are very illiquid assets. The investment in VCs itself are very illiquid assets. And by illiquid, I mean that they're difficult to sell, right? Unless there's an exit. If you want to sell an investment on a startup or if you want to sell an investment on a VC, it's difficult to find someone that actually wants to buy it. And it's not just VCs that are illiquid. There is other things like collectibles, art pieces, real estate, that they have problem with illiquidity. And this asset class is huge. The illiquid asset class is 500 trillion worldwide. So, enter the blockchain. What do you think blockchain can do for these assets? So blockchain technologies basically allow the concept of tokenization. They will create a token, which is a digital unit of entitlement, on a blockchain that replicates through a smart contract the characteristics of a physical asset. And that way this asset becomes digital and can be then become liquid as well. And because it creates discovery pricing, it's tradable 24/7, the transaction costs are very low, et cetera, et cetera. So when things get tokenized and they become digital, the meaning of ownership completely changes. And this is very, very revolutionary. This is one of the things that is more revolutionary about blockchain technologies. So the world is being tokenized. There is the first famous tokens, if you want, are the so-called cryptocurrencies, which are basically tokenizing or digitizing a currency, right? They are basically things that you can use to pay, to store value, et cetera, and then they are powered by a distributed digital ledger, which is the blockchain. And these are things like Bitcoin, Ethereum, Litecoin, et cetera, et cetera. The next wave of things, which is the recent one, is the so-called utility tokens, where companies are basically creating a digital coin for their environment where you can actually do some sort of function or utility within a platform. These are companies like Golem, the Basic Attention Token from Brendan H., or in Israel you have Bancor that have basically been successfully issuing a utility token. Okay? And there is a new wave coming, which are what we refer to as the security tokens, where you actually are securitizing a token and then replicating the value of a security. This is what we're doing with Spice Venture Capital. There was one in the US a few months ago called Blockchain Capital, did something along the same lines. Filecoin is doing that, et cetera, et cetera. And this evolution is actually quite interesting because if you think about the numbers, first, the utility tokens have started disrupting the ICOs. So ICOs today, in Q2 2017, this crowd selling of these utility tokens have become 3 times bigger than VC investments. So if you're a VC today, you have a hard time actually getting any startup to get your money because they can actually get money from someone else. And why startups like this? Well, very simple. First, they get support from the community because these tokens get widely distributed, and the community then wants the token to succeed, but therefore they use it on the platform. They don't have any equity dilution because they're not selling shares. They are pre-selling a product. It's like a Kickstarter for the startups. They can raise a lot of money quickly. They get liquidity instantly for them and for the token holders. There's a lot of excitement that gets created around these companies, and then they bypass the traditional VCs with all their terms, with all the liquidation preferences, and all their conditions. So what we're seeing is the tip of the iceberg. I know there is a lot of noise, but I believe this noise will go away as regulators come in and they set the rules, and I don't think that this is going to go away. Now, can VCs adapt? Well, yes, of course they can. VCs adapt, like any incumbent, they will take their time, but some VCs are already adapting, and they're trying to get in early in, meaning invest before companies do ICOs, so they can actually own the shares for the company gets this liquidity event. they can bring all the value VCs have in terms of the robust process for investment, how they evaluate the companies, the credibility they give to the ICO if the VC has invested in the company, et cetera, et cetera. And they can, add the value to the ICO in general by, backing the company and bringing the rigorosity in terms of how they analyze the quality of the company. Now, my question here is not about how VCs get disrupted, but how investment in VCs get disrupted. So investment in VCs, and this is a quote from David Sachs, the founder of PayPal and Yammer and Zenefits, he basically argues that, LP investments in VCs will also get tokenized and will become liquid, because if not, this will become a huge disadvantage for any VC that is not providing liquidity to their LPs. And only the ones that have a huge credibility and will get away without doing that, but everyone else will have to adapt to this new world. And he refers to this new world of ICOs and liquid VCs as the crypto capitalism versus the traditional term of venture capitalism. So VCs are one of the most illiquid classes out there. I'm an LP in 2 funds, and basically my LP contract doesn't allow me to sell the shares and have to give the money and then wait to 7 to 10 years until I get a positive IRR and start receiving some money back, because all this time the capital is being deployed, and it's being deployed in another illiquid asset, which are startups, which take time to return the money. So you have to be a good believer in this to put the money there, because you have basically to give it to someone and forget for 7 to 10 years until you get a return on it. Okay? Now, enter the liquid VC. What do we want to do? We want to leverage this security tokenization to basically create a VC which is 100% asset-based, so the token actually reflects the value of the NAV of the VC, is liquid from day one, and we've partnered with the Israeli company Bancor to basically provide liquidity to our tokens from the first day that we issue them. It's inclusive. We want to let people, as many people as possible from as many places as possible within the regulatory framework to invest in this VC fund and not keep it as a close investment. We want to be very transparent about what we do with the money, and we will record things on the blockchain as well, so they're immutable, so our decisions, our investments, and everything. And we want to be compliant. We want to do it following the regulations. And if this is a security, this is security. There's no problem with being a security. You just need to comply with the security laws and carry on with the project. So a liquid VC means a number of things, depending who you are. So if you're an institutional investor, you get liquidity. That's the main thing, right? You don't have to wait 7 to 10 years. And then you get exposure to this new wave of investment, which are ICOs versus the traditional VC investments. If you're a cryptocurrency investment, you see the volatility that these markets have. This token is a cryptocurrency that is backed by assets. It's backed by the investments on the startups, and therefore it will have a lot less volatility than, let's say something like Bitcoin or Ethereum. And if you're an accredited investor, you can get on a VC. You don't do just crowdfunding in one or angel investment on one startup. You can actually invest in a vehicle that will do, dozens of investments on startups and enjoy the same benefits that the VC has, the LP has on the VCs on top of the liquidity. So there's a lot of hurdles to do this. We've been working on this for months, and it's not easy because you have to look at different jurisdictions to understand what type of filings you need to do to be compliant with the law. You need to see what you put on a memorandum of subscription agreement to make it friendly to the consumers, if you want, compared to the your investment professionals. You need to understand what are the boundaries in terms of marketing this type of products. You need to do things like KYC and AML, FATCA reporting, figure out how to do the secondary liquidity, et cetera, et cetera. There's a lot of work here. So we see ourselves not just as a VC, but someone that is generating a lot of legal IP and technology IP about how you provide liquidity to illiquid assets and how you tokenize a VC. So if there's any VC in the room that is interested in this, we're happy to share our learnings because we think this will become the future of how VCs are being done. So finally, just to terminate, we call it SPICE. And a lot of people ask us, why are you like the Spice Girls of the VC world, or who are you? Why we call it SPICE? Well, we call it SPICE because there is a movie and a book called Dune, where the spice is a commodity that people mine, and that gives you longer lifespan, greater vitality, heightened awareness, and this is what we think our project is going to do to the world of VCs. And by the way, it also gives you blue eyes. So if you go to our website, spicevc.com, please be careful, wear some eye shades, because you can get blue eyes by looking at the spice. Thank you very much.